Hi everyone, my name is Fong and my matrix number is 277450. I will share with you all about the country background of Italy. Italy, formerly known as the Italian Republic, is located in Europe at the heart of the Mediterranean Sea, bordered by France, Slovenia, Switzerland, and Austria in the north. The total land area of Italy is 301,340 square kilometers, while the total coastline is about 7,600 kilometers long. The country is divided into 20 administrative regions, 101 provinces, and 8,001 municipalities. The administrative regions consist of 15 ordinary autonomous administrative regions and 5 special autonomous administrative regions. Italy had a population of 60,251,988 as of 14 November 2022. The capital of Italy is Rome, which was founded in 753 BC. Ancient Rome went through 3 distinct phases, namely the Roman monarchy, Roman Republic, and Roman Empire. At the end of the 15th century, the struggle between France and Spain for the Apennine Peninsula intensified, leading to the Italian War that lasted for decades. In the 19th century, with the rise of the Italian unification movement, the Kingdom of Sardinia began to gradually unify the north and the south. The Kingdom of Italy was established in March 1861. Later in 1870, it conquered Rome and completed the territorial unification. Since then, Italy has competed with other European powers for colonial expansion. On October 31, 1922, Benito Mussolini came to power and implemented fascist rule for more than 20 years. Under a fascist government, Italy invaded Ethiopia, helped Franco in the Spanish Civil War, and formed the Rome-Berlin Axis with Germany. Italy then involved in the World War II and became a defeated country. On 2nd of June 1946, a referendum was held to abolish the constitutional monarchy, and on July 12 of the same year, the first government of the Republic was formed. After World War II, Italy participated in the Marshall Plan, signed the North Atlantic Treaty, and actively participated in the European integration process. Italy is also one of the founding countries of the European Union. The President of the Republic is the head of state and the Commander-in-Chief of the Armed Forces. He is elected by Parliament in a joint section of its members and represents national unity. Apart from that, the President also serves as the Superior Council of the Judiciary's chairman. The Prime Minister, who is appointed by the President, exercises the responsibility for managing the country and is accountable to the Parliament. Parliament is the highest legislative and supervisory body in Italy. It implements a bicameral system and consists of the Senate and the House of Representatives. The powers of the two chambers are equal, and they can pass resolutions independently and are related to each other. Italy is a developed capitalist country, which is one of the 4 largest economies in Europe. The regional economic development is uneven. The north is developed in industry and commerce, while the south is dominated by agriculture and the economy is relatively backward. Italy is said to be the kingdom of small and medium-sized enterprises because it has a well-developed SME sector. The SMEs in Italy have a high degree of specialization and are traditionally export-oriented. That's all about the country background of Italy. Thank you.
Good day, doctor. My name is Tang Wei Min with matrix number 279098. Moving on, I'll talk about the financial system in Italy. So the Italian financial system falls into two categories, namely the financial institution and the financial market. First of all, the financial institutions function as the middleman between investors and borrowers. They mobilize the excess unit savings and invest them in productive activities with higher rate of return. The financial institutions in Italy are classified into two groups, which are banking institutions and non-banking institutions. Generally, the Italian financial system is bank-dominated. They function as gatekeepers, where they inspect the financials of the corporations, representing the investor before making a financial investment. However, despite that banking institutions continue to dominate the Italian financial system, the non-banking institutions also play an important role. And in fact, it has been expanding recently. The non-banking institutions are such as the insurance cooperatives, pension funds, and financial auxiliaries. They provide financial services but do not hold licenses in banking and finance, and therefore, they do not take traditional demand deposits from the public. Besides, they supplement banks in offering financial services to individuals and firms like investment, risk pooling, financial advice, brokering, money transmission, and check cashing. Another category of the Italian financial system is the financial market. The financial market offers buyers and sellers the means to trade financial instruments like bonds, forex, stocks, capital, and derivatives. They play an important role in helping to improve the efficiency of capital generation. In 1983, mutual funds were added into the financial markets. The establishment of the mutual funds had a significant impact on the market structure, where it brought household savings, which were previously deposited in banks, to the stock exchange. The events of 2008 to 2012 had significantly impacted the Italian economy and financial intermediaries. Such events were the global financial crisis, GFC 2009, and the European sovereign debt crisis 2011 to 2012. Apart from the economy and financial intermediaries, non-performing loans skyrocketed, profitability decreased, and credit declined. Now I'll move on to talk about the main regulators that regulate and supervise the banks, insurers, and other financial institutions in Italy. Basically, there are four main regulators. The first one would be the Central Bank, Bank of Italy. It regulates and supervises banks and investment firms and issues general guidelines and recommendations. Furthermore, the central bank sets the standards for risk control and also establishes the standard for capital adequacy. Moreover, it supervises authority competent for the payment services market. It is also responsible for the anti-money laundering regulations which apply to banking and financial intermediaries. So the next regulators would be the Italian Companies and Exchange Commission, known as CONSOB. It is the public authority responsible for regulating the Italian financial markets. It carries out activities to protect the investing public and also oversees the activity of the securities market and the investment firms. Moreover, it emphasizes on transparency and market conduct of banks. Next up, we have the Institution for the Supervision of Insurance, known as IVAS. It regulates and monitors the insurance and reinsurance business and mediation. It also controls insurers, including prudential and consumer protection aspects, and also performs activities necessary to promote an appropriate degree of consumer protection. Lastly, the Pension Fund Supervision, known as COVID, it helps supplement the pension system. It ensures that supplementary pension funds are managed wisely, transparently, and fairly. Also, it guarantees that the system for supplementary pensions is adequately protected and operates as intended. That's all from me, and now I'll pass the presentation to the next presenter. Thank you.
Hi, good day everyone. My name is Liao Hui, number metric 27X094. Now, I would like to discuss about the structure of banking system in Italy. From this slide, we can see that the banking system in Italy separate into two, which are central bank and banking institution. There are three main types of financial institution in the Italian banking system, which are commercial banks, saving banks, and investment institution. Now let us look more details about Bank of Italy. Bank of Italy, also known as Banca d'Italia, which located in Rome, and it is the country's central bank. The responsibilities of the Bank of Italy include maintaining financial stability, issuing currency, and providing banking services for the country's government. These services including maintaining the government's account, issuing and selling government securities, and acting as a clearinghouse for government transactions. Additionally, the Bank of Italy also has other important functions, such as issuing currency and acting as the government's banker. Moreover, the bank is also responsible for the supervision of the banking system. As mentioned earlier, there are three main types of financial institutions in the Italian banking system. First of all, commercial banks. Commercial banks are a financial institution that accept deposits from individuals and companies and use those deposits to make loans and then collect the loans when they come due. In addition, commercial banks offer a variety of other services such as money orders, currency exchange, and safe deposit boxes. Not only these services, the banks also provide other services such as foreign exchange and money transfers. Commercial banks in Italy separate into four, which are three national banks, charter banks, cooperative banks, and private banks. The goal of three national banks are to guarantee system stability, effectiveness, and adherence to norms and regulations. The bank achieves this goal by secondary legislation, controls, and collaboration with governmental authorities. However, a financial entity that conducts financial activities such as lending money and protecting deposits is known as a charter bank. A charter bank is frequently linked to a commercial bank. In Italy, charter banks usually offer services such as investment banking, retail banking, and private banking. These banks are usually based in large cities and have branches all over the country. Next, cooperative bank is a financial institution owned and operated by a group of individuals for their mutual benefit. Unlike a traditional bank, where shareholders own the bank and make decisions about its operations, cooperative banks are owned by their customers who have say in how the bank is run. Besides, cooperative banks are not-for-profit organizations that are managed by a board of directors elected by the membership. Their responsibility is setting policy and ensuring that the bank operates in a safe and sound manner. Last but not least, the term private banking describes the specialized financial services and goods that retail banks and other financial institutions offer to their high net worth individual clients. In addition, private banks are financial institutions that are not regulated by the government. They are usually owned by a small group of people and are not required to follow the same rules as traditional banks. Next, commercial banks and saving banks both offer similar services, but saving banks are financial institutions that primarily exist to accept and pay interest on saving deposits. The purpose of saving banks is to promoting saving habits among the population and encouraging the use of credit for productive investment in order to contribute to the economic and social development of the country. In addition to taking deposits and making loans, saving banks also providing financing to small and medium enterprise. Furthermore, saving banks in Italy are subject to the same regulations as other banks, but they are organized differently. Saving banks are typically owned by their depositors and their profits are used to benefit the local community. Last, investment institutions are businesses that exist to make money for their shareholders by investing in other businesses. Next, investment banks are for-profit organizations that underwrite, advise on, and distribute new securities issues of both debt and equity. Furthermore, they also act as financial advisors to both corporations and governments. Investment banks typically have two revenue streams, their securities division and their investment banking division. Besides that, investment banks in Italy are responsible for the management and placement of equity and debt securities. That's all from my part. Now I would like to pass this presentation to the next presenter.
Hi, a very good day to everyone. My name is Chang Yu-hong and my matrix number is 279660. And now I'm going to talk about the market penetration. So, and now let us think what are the advantages and the disadvantages for the Malaysia bank to expand internationally. So the first advantages will be access to the new market. So once the company has successful in their home country, so they can make a choice to take the business approach. So within this, they will have the potential to build a new customer base, and it also will go. It also have a lot of other benefits, like they can help the bank to increase their number of customers, and they also can build the name brand recognitions and also establish the credibility internationally. And the second advantages will be fund sources. So the bank fund source will be rises, so that the bank assets and profit will be rise, and this situation will help the bank not just rely on its home quarter bank. Okay, the third advantages is risk diversifications. So when a bank want to expand the market, so they need to stop focus on the local market, and then the risk will be diversified. And when they are not only focus on the local market, so the revenue will become more stable as the local market slow down, so that the bank still can earn some profit from the foreign market. So all these are the advantages that will be get by the bank if they expand to the new market.
Okay, my name is Monisha Murthy, matrix number 282068. Okay, I will explain the last advantages of market penetration. Uh, According to Datuk Sri Mustafa Muhammad, a minister in the economic department, claimed that Malaysia's total commerce with Italy increased by 21.7% compared to last year. Okay, Italian investment makes our market expand, and this investment give the residents 4,320 jobs, uh, a new job opportunities through the direct hiring of workers for new factories. FDI, which is foreign direct investment, have the potential to create jobs, which improves aggregate domestic employment through the sorts of jobs generated, the regional distribution of new jobs, wage levels, income distributions, and skill transfer. When direct investment is incorporated into a local economy, business culture, which consists of organizational values, management techniques, and corporate value, is transmitted. Indirect effects as a result of trained workers involved moving from foreign companies to other industry, establishing connection with suppliers and service providers, and increase incomes, which have the potential to increase employment through higher level of investment, consumptions, and savings.
Okay, so just now we already explained some advantages of the market presentation, and now let us look at the some disadvantages of the market presentations. So the first disadvantages is cost of establishing and terminations of an entity. So the company or a bank, they need to be ready a large amount for setting and shutting down costs. And these costs are quite expensive as the company need to build the infrastructure, and they also need to pay the local employees and more. And the continual expenses is also quite expensive, and these continuous expenses are necessary to keep the company to properly operating. So all of these costs need to be counted and need to be prepared by the company. Moreover, the second disadvantages will be barriers based on the culture and language. So we know that if a bank wants to open a branch at Italy, so the staff need to receive some cultural training in their business practice. So as we know, the Italians, more of them are not speaking English as well. So when the staff is trying to say Italian with them, so the locals will feel a sense of intimacy. And moreover, this will help the bank to develop and gain the popularity more quickly. And the last disadvantages is risk of compliance. So as we know, the bank or a company, they must follow the country regulations, and they also need to connecting with the right individuals may help them to stay compliant. And if a bank is failed to remain the compliance, so it may cause the higher cost and some potential legal issue to them. So that's all from me. So I will pass to the next person. Thank you.
Okay, the risk of market penetration is the political risk towards a country which is collaborating each other. Political risk is the possibility that a country's operations could be harmed by political instability and the commercial involvement. Example, the conflict between the Russia and Ukraine is having significant influence on the total world's supply chain, obstructing the movement of commodities, causing sharp price hikes and product shortages and severe leading to severe food shortages globally. Higher energy and commodity prices due to the war and related sanction intensify inflation in many economies, which is in many countries. Political risk can lead the government gradually alienate international cooperation by enacting new taxes and regulations or laws. In exceptional circumstances, a nation government may seize a company's asset there. Nationalization is the term for this action. For instance, Venezuela in Italy has recently nationalized businesses in the glass, cement, steel, and oil sectors that were under foreign ownership. Other than a political risk, the country may also face good prices risk. The broad increase in commodity prices such as wheat, oil, grains will affect the price level of imported products, which if the situations continue, Malaysia will face the higher imported inflation, which contribute to higher food prices. Although each country sets its own charges and taxes, they are often based on the value of the goods sent. Recently, the Italian baker Sandrian Berhad, the chain of bakeries that creates the baked goods sold under the Massimo brand, announced that except for the white sandwich loaf, all Massimo bread products have raised their prices by 10 cent to 60 cent. It is because of the increase in the price level of wheat in Italy.